this is one of the best months to be invested in Tesla. I'm going to start by saying that this is not a buy signal. I did actually buy some calls today, which I'm going to share my exact position with you in a little bit. However, historically, Tesla is green 69% of the time in November. You guys, if you've been watching for a while now, you know that we were talking about September and October being terrible months, and we were right, just following a seasonality chart. Now going into November, 70% of the time we are green, and on average of that, 70% of the time we're green, it's a return of 10%. Let's look at the chart first. This is a daily chart, and the indicators that we are currently running at this moment is just simply going to be the Smart Money Concepts indicator by Lux Algo, which you can just go up to indicators and you can type in Smart Money Concepts, and there's actually a video that we have on our channel talking about how we set that up. And what we're looking for is these major sell blocks, major support blocks, and areas of interest. We also have a volume profile that's set up here, and the volume profile is on the daily chart, which we're looking at currently, and it's set up for the past 252 days. All of our volume was sitting here between 241, as we said before, up to $280. If we were to actually go through and draw a trend line, you could see that we had this symmetrical triangle that was setting up, and we were covering for a very long time before we ended up breaking after earnings. We had a really good short position here where we had this change of character that we've been talking about for a bit. I thought that we were going to potentially bounce up to about 236 before moving down to the 190s, because the 190s have been our target for a while now, but I figured there would be a little bit of a relief rally. That didn't happen. Even though we bounced, look at how bearish the candle is closed. This is such a bearish candle, followed up by this third candle, which closed significantly lower. This is a really bad sign. The other thing I want to talk about too is a couple of areas of interest of low volume. This big volume profile on the right side here, these horizontal volume bars. For anybody who's new, this is called a volume profile. Normal volume bars, the ones that are vertical, up and down at the bottom of your screen, which I don't have on right now, those are great, and they're going to show you how many shares were traded within a day. But what they're not going to show you is at what price those shares were actually traded. And the reason that we want to know those prices is not just because they're technical levels of support and resistance, but it's because it's within these heavy areas of volume that we have institutional levels and institutions taking positions. The way that a hedge fund or an institution takes a position is not the way that we take positions, because they could take weeks or months to build a position because they're taking such a massive trade. And if we're looking here on Tesla stock, the interest that we're looking at is 243 up to 264 and about 198 down to 180. The thin areas that you can see here on Tesla stock's chart, this big one here from about 244 down to where we are of 190, these moves are always extremely aggressive and very fast. For instance, this was a move that occurred from Wednesday, May 2023, so the 31st, the very last day of May, 9 days later to June of 2023. And this here was a 24% move to the upside. We broke up over there, and then look what ended up happening. This move was just in 8 days, guys, 14%, followed by another 15% move in 11 days. This was a false break, and now this one has been a 20% crash, basically, in 14 days. So these areas, the stock can move so fast through these levels. And so the reason that I ended up going long today is for a couple of reasons. Number one, my target for the short ended up hitting. I still think we can see 190 potentially, but I think that the risk versus reward is just too good to not enter here, especially since we could see a lot of bulls stepping in at this level. Now, before we actually draw out our risk profile and how I ended up taking the trade and what my analysis is going to be, I do want to explain that if this level is given up on 195, to about 190, it's not good. We're going to go over SPY towards the end of this video, as well as triple Qs, and we'll talk about what levels that they're both pushed at right now. But all three of these, Tesla stock, SPY, and QQQ, are all sitting at very important levels.